Hey everyone, how's it going? Hope everyone is well. We're gonna get started with the outlook now. So let's get started. I apologize, I'm a little bit sick today. I'm gonna be honest with you, so I don't know how long, if I can do the full 2 hours or not, but I'll try my best to go over whatever I want to go over. Just post this. Backtrack a little bit. Can everyone hear me well? Can everyone hear me well? The audio today, the sound is okay. There's no echoing. There is no noise. And is the overall quality of the stream okay? Can you see my chart? Can you see my drawing? Is it all good? Just give me a yes. That would be awesome, so we can continue. All good, all good. All right, thank you very much. So, just update everyone in terms of what I'm looking at for the week ahead. There's a few pairs that I'm looking at. I'm mainly still watching the dollar pairs. This is posted in my Telegram. Those of you who don't have my Telegram, this is where I post all my analysis. So I talk about how I'm still looking at the dollar pairs. I still think dollar pairs can have some move. I know euro dollar didn't really play out for a lot of us. I'll explain that after. But I think most of the dollar pairs are still relatively good potential, a good opportunity on them. So we'll go over those. I got a bunch of messages about the yen pairs. Looks like there was a lot of people who entered a short on yen pairs, and they didn't really work out. They didn't really play out, and I kind of mentioned this. I was never really interested in shorting the yen pairs from last week, and I made that workshop video. Those of you who watched it will understand really why I decided not to enter the yen pairs. Again, it's just conflicting bias with higher time frame, lower time frame. That's really why it lead to my reason of not entering them. I went over the favorite pairs. I have the dollar pairs. I have a couple Aussie Kiwi pairs, some commodities, and then some crypto to go over. Okay. Now, I went over. I had the recap videos last weekend. Still in silver, but I did get tagged out on euro dollar, which we will go over euro dollar briefly. So we're gonna go over silver really quick. So still the same management, right? You can see I'm still in the 2 silver position. I did close down euro dollar. I'll explain this right after. Silver is still looking like it's relatively bullish. I'm not really seeing anything different wise. Still looking at this high here to see whether or not price is going to break above it or not. So we're just still chilling here. Set an alert here just to monitor what the price would do. If we zoom in here, not much is going on here. Remember, there was some Friday news, right? Price pushes down, and it would just kind of hover around this area. It's not really moving much, and there's not much movement here, so to speak. So the same plan is the same, right? For my recap video, I'm still talking about either we're going to get a larger consolidation, something like this, and perhaps a larger inverse head and shoulder to continue, or we're just going to break up and followed by correction to go higher, or it's going to be a reversal. So either or, I'm prepared for any type of situation that may happen here, and I'll just monitor the price closely here. So that's silver. Now euro dollar, I know we saw the price push down right here, right? Now I pretty much exit the position here. I just update you guys in the Telegram here. I did have to close them down once the price break the previous low like this. So at the time, this is what it was looking like. Before I went to sleep, basically the price was all the way up here or something, right? This is what I see before I went to sleep. So I just still have this. I move up the stop loss just below this low here, right? So this was the correction that I saw at the time, and I thought that this is a pretty good area for this correction to continue. And basically, I just move up both of these trade stop loss just below this level here. I think it's 1.1615 or something like that here. So I didn't really expect price to push down all the way down just in the London session, which it did really. It just kind of had a really big crash down to the downside. And then when I woke up, pretty much both position was already tagged out. But overall, I wouldn't have managed it differently. I stick to my plan to keep my first position at +1 and the second position just a little bit above break even. So I don't think there's anything wrong with that. I'm still looking at the overall correction here at the time to thought that this was going to continue to the upside. Now, where the price is at now, and this is the reason why I enter again, is when I woke up here, um, I saw price drop down quite a bit. But again, this is the time where we usually look for bearish continuation, right? Such a bearish move to the downside, normally we're going to see bearish continuation, right? That's usually how we're going to expect price to move. But instead, if we look a little bit deeper here, what we get here is basically an inverse head and shoulder, right? So buying here at the bottom is a reversal entry, right? This is a correction here. We're getting in from the low here, and I like how this potentially could still reverse up, and I like the bullish reversal here. And the reason why also is that we've seen this type of price action all the time when we see a strong bearish push down. And if there was not followed by bearish continuation, instead was a bullish reversal, this is generally a sign that the bearish momentum is pretty exhausted and we expect to see a potential reversal. This is exactly the same as pound dollar. If you, those of you who remember this, is that we had this, if we zoom out a little bit, very similar structure, right? This is the larger structure we saw. Price broke this previous low just like euro dollar broke that previous low. But after breaking the previous low, there was no continuation to go further. Instead, it's a bullish up move, and then it eventually resumed the bullish trend. So that's really why my reason here for buying euro dollar again is just that push down. We broke the previous low, but there was no really bearish continuation to the downside. And I saw that there was an inverse entry. I just entered this pretty much maybe 15 minutes or 20 minutes before the start of the stream. So happy to enter this, happy to see if this is going to be another push up. And we're used to seeing price like this when we push down from the price just to push up afterwards, right? So we'll see how this one goes. We'll see how the New York session give us that bullish outlook. And I still believe most of the dollar is looking pretty weak. Okay, so I talk a lot here. I wasn't really looking at the chart, but that was the two positions I have currently running. We'll just see how they go. Any question here, guys, before we get with the outlook for the week ahead? I have a few pairs I want to talk about. If you guys don't mind, I'm going to talk about the pairs I want to talk about first. So I'll talk about the pairs I want to go over first, and then I'll ask you guys to let me know what pairs you're looking at afterwards, okay? What caused the euro dollar to drop? I really don't know. Maybe some news, or maybe just volatility. Anything can happen. Anything can happen, right? So we manage it to our best ability, right? The market doesn't have to go how we want it to go, right? So always remember that, right? We have technical setups, we have our analysis, but price doesn't have to go what we want it to go, right? So this is why risk management is in place, trading plays in place, and we control our mindset when price doesn't play out, right? So alright, so let's get with the outlook for the week ahead. Bad news for euro. Bad news for the euro. Yeah. What is the news, by the way? If you guys know, welcome to share with us. That would be nice. I didn't really pay attention. I was sleeping. Those of you who know me, I live in Vancouver, so actually during the London session, I actually was sleeping. I always sleep through the whole London session, by the way. So, all right, let's get started with the outlook now. So I'm gonna start with dollar index, right? As you guys know, I'm still favoring the weakness of the dollar, right? So if you can see dollar index here, overall I'm looking at it still bearish, right? We actually be able to break down from this ascending channel here, and then there is consolidation now. Now if we see what's going on here is that this is where the price, this is when during the Linden session there's a really surge to the upside, right? So this is probably caused what caused euro dollar to drop, so dollar index pushes up. But to me, we're still in this consolidation. We just broke this high. This can easily become another continuation to push down. So overall, my bias here is still looking for short, right? We still have all the higher time frame is still in our favor, right? Higher time frame top, higher time frame structure, and then we have expanding structure, ascending channel. We see the impulse correction, and looking for the impulse down and continuation. So I still reasonably, my bias here or my view is still looking for the downside, and then further downside, further continuation is very possible here on dollar index. Now, now we're looking at a few dollar pairs, right? We can talk about that. There was a few key dollar pair I was looking at. Aussie dollar is fine. I think Aussie dollar, again, my bias here, at least my personal view here, is still looking for the weakness in dollar. I know some of you guys may be looking for short. Again, follow through your plan, right? Nothing wrong with that. My bias, again, is always going to start from the higher time frame, right? And I still see that this is still overall bullish push up, potential continuation kind of a structure here. And we have that inverse head and shoulder pattern, and price basically break up pretty impulsively, right? We can see that from after this inverse head and shoulder completes, and then there's a smaller inverse head and shoulder, price eventually push up very aggressively. We passed this previous high. The difference here, guys, is that price break the previous high, and then it's pretty much en route to form another continuation. I think this is why my overall bias here is still looking for bullish. I didn't really think, or I didn't really see this as a ascending channel. I think this is just more of an impulsive move, like just like this, right? These two are more as an impulsive phase, whereas these are correction phases, right? So there's a distinguish between the two, at least from my point of view. Now, because we break this previous high, price is likely to consolidate here. Not really personally looking for this buy here. I think this is pretty close to the top, but I would prefer if the price can break up and continue. I think that would be a better buy setup for later down this week. So, but I still think Aussie dollar is looking pretty clean, but I think Kiwi dollar at this point right now is looking much better now. So if you look at Kiwi dollar here, I just made this post I think last night, the night before I went to sleep. We have this really strong bullish impulse from the price here, right? And then we fall into this kind of a consolidation before this continuation, kind of a flag or channel pattern. And remember, I was always looking to see whether or not price is going to impulsively break to the upside. Right? We were looking for an impulse break to the upside, breaking the previous high, which is good. Now it seems like there is consolidation. This is generally what we look for in these type of setups, right? Impulse, correction of structure, looking for the impulse up, and looking for lower time frame continuation, right? This is exactly kind of what we look for as a correction after breakout entry. So I think it's good to wait for a consolidation here, and waiting for price to give you another opportunity buy, whether to this previous high or the top of the correction here. That would be very awesome. I think there is pretty good risk reward here if we were to enter 300 plus pips or so. I think that's a pretty big potential, right? Depending on your entry, depending on your stop loss, etc. But this move is looking pretty clean for an additional continuation after this move. Okay. So that's Kiwi dollar. Went over euro dollar already, right? So went over euro dollar. And my bias still doesn't change, right? We talk about euro dollar for the last 2 weeks already. Still breaking out of this descending channel. To me, this is potentially a larger correction, right? We just used to seeing flags like this to go upside. Now we're just creating a more of an expanding structure to go, right? This is still a possibility of a continuation up move. We just have to be, again, patient here. Now I will point out the entry that I did is a little bit more advanced or a little bit more risky. So obviously don't just follow, right? Don't just follow me. Have your own plan if you want to enter something like this. My bias, like I said, is the inverse head and shoulder, and we break the previous low, but there is no continuation down. There doesn't seem like anything on the lower time frame that indicates a bearish continuation, and that's why I choose to enter here. But we'll see how this one goes. But overall bias from the higher time frame down to the lower time frame, I think this is pretty clear. It doesn't really change. Doesn't really change my bias here on the lower time frame. Still looking for an upside move to this previous high and then to the top of the descending structure and the top of expanding structure here. Right? Doesn't change here. So if you missed my recap, you're welcome to watch my recap video from that. Again, I got out of the two position here, like I mentioned. In the morning when I woke up, price just kind of pushed down here, so I got tagged out here for just a little bit of profit here. But again, I don't stress this too much, guys. Typically, when this happened, a lot of traders get a little bit upset. My main target was always at the top, right? Either breaking this high here or the top here. So me not taking profit wells in this consolidation is fine, right? Because I had higher plans, or my plan or my target is much higher, right? Always remember, unless you close the position, whatever dollar amount you see in this area is not realized, right? So don't get stressed out because you didn't exit here to earn the profit here, because you haven't exited the trade, right? So whatever you see on the broker app before you close the position is an unrealized profit, and that amount can fluctuate, can move all the time, right? So this is why I also encourage people to not always stare at the phone or stare at the broker every time to look at the dollar amount, because you get quite a bit emotional when it's in that situation, right? So let's continue here. Pound dollar also is another one on my watch. Pound dollar here, still looking for bullish potential. That I see this is more of a descending structure. This area here, same thing with euro dollar that I pointed out, right? Price pushes down, no continuation. Instead is a bullish reversal. So to me, I'm used to see this kind of price action here, and we're in this higher time frame structure as well. So an impulse out followed by this consolidation, and if we can break out of this descending structure and continuation here, would be nice to see if we can push up another leg. So I would see price to break out of the descending structure first as a first confluence, and looking for continuation after. I think that would be great to enter. So dollar cat here, dollar cat still looking okay. I think I was looking at this to see whether or not we're going to get a continuation correction here. We did push down, we did form a smaller correction here. It's looking like that this could be another continuation, whether or not we either expand a little bit bigger or this might be enough to push down the price. So we'll monitor this one here. Dollar Swiss is also looking nice. I know some of you guys are in dollar Swiss as well. It's pushing down pretty good, right, from this bearish correction. So originally had the head and shoulder here, impulse correction, impulse down, right? So this might be just another consolidation here, eventually to push down to the previous low. Okay. Any question, guys, on the dollar pairs? I think I went over most of the dollar pairs. I'm really not interested in anything else at this point. Dollar yen, I get overwhelming question about the yen pairs, which I will go over. Generally speaking, I wasn't really planning to short here, and in fact this is more looking like that we might fall into something like this to continue, which is the same across the yen pairs as well, which I'm gonna go over them. But I'm not interested in selling the yen. I mentioned that last week, and I'll mention this again this week based on the current development of the price. I don't really see much here on the yen pairs. I see it more bullish. In fact, I see it more bullish on my personal view on most of the yen pairs because of the higher time frame. Dollar yen as example is, I know a lot of you guys probably see this as a previous high, that this could be something here. But again, the difference here, guys, is that you have to see how the price gets to that double top, right? This push up, right, is quite impulsive. And generally speaking, if we're going to look for short, I need to see more than just something like this. There's really not much here. There's, some of you guys may identify there is something going on the lower time frame. I don't know how you guys would manage to draw this out, but to me, it has to be something here on the lower time frame that looks like a structure or pattern, right? It's not just a lower time frame, 15-minute ascending channel or something like that. And that's like there was a sell here. I think someone showed me their chart. But generally speaking, this to me it's more falling into a consolidation rather than a bearish reversal kind of impulsive move to the downside. Like I don't really see it as more of a bearish move down rather than anything. To me, this is more just falling into a consolidation, right? Now, if we can develop a little bit more here, maybe a push down and then forming another consolidation like this, perhaps forming a head and shoulder here, that's a different story, right? That's a little bit more tangible. It's a little bit more noticeable on a mid time frame kind of peak. But see any kind of these kind of sell on the 15 minutes or lower time frame generally doesn't attract me to look for a sell here. Okay. Yeah, I'm gonna go over gold after all the currency pair, guys. So just be with me here. I'll go over gold right after these. Break even on euro dollar. Yeah, that's okay, right, guys? Right, taking break even, it's better than taking a loss, right? So that's good. We can always have more opportunity later down the road as long as we have a trading account, right? So risk management 101, making sure you have protect your account, protect your capital, so that you can actually still have capital to trade when the opportunity comes up, right? You don't want to be some other trader who blow their account and then miss out the opportunities and then give up later on, right? Dollar cat sell, I mentioned that earlier already. I think it's something is developing here. Again, we broke this previous low, right? The good thing is that we broke this previous low, and there is some bearish kind of continuation price action here, which is nice to see, right? We want to see this be able to push down for the dollar. Now, I was talking about the yen pairs, right? Now, if you look at the higher time frame here just had a strong bullish push up to the top. I understand there is double top. Or potential double top. I'm not denying that there is a potential confluence here. But if you look at the lower time frame, all we have really, and I don't even want to think this is like ascending channel really. I know some of you guys potentially see it that way, or maybe a bigger one that you draw, and that's okay. Now, price push down, there's a form of correction. I think generally this is where a lot of people enter the sell. But after the sell, remember on Friday when I did the workshop video, I mentioned that it's creating kind of an inverse head and shoulder. Didn't really push up for the price, and then we had the push down during, I think this is during the Monday when the market opens or so, and then we had this kind of push up from Monday. Sorry, this was from Friday, and then we had a Monday kind of recovery. Again, to me, this is looking more as a bullish correction rather than a bearish sell down, right? The difference here again, guys, is that we have the head double top here, but the lower time frame really doesn't have enough confluence. What more likely here is that the push down here is just more of a corrective push down in a larger structure to go higher, right? So my bias here generally on the yen pairs, I'm still looking to go higher rather than a immediate kind of drop down for the price, which is maybe some of you guys are looking at, right? To me, this is more looking like a bullish correction, a bullish continuation correction rather than a bearish kind of move down for the price. And this is why I'm not really interested in selling the yen pairs. I'm more leaning towards a bullish bias on the yen pairs. I'm not looking for sell. I'm just kind of waiting for the development here. This is generally similar across the board. If you look at Kiwi yen, it's the same idea. Higher time frame had a strong bullish push up. We didn't really reach the previous higher time frame high. And lower time frame, there was a lot of people give me this messages saying that they got in on the sell here. Price pushes down, but it really reversed up. Like got tagged off for break even, and then they were looking for sell again, but push down and price pushes up again. So really not much else going on here, guys, right? This is more a corrective move, right? We're not seeing price going down like this, which is what you want to see. We want to see impulse correction, impulse, continue to push down the price, right? But you can see this is more moving sideways, moving down rather than a impulsive move down, which is the difference here. So this is why I still lean to more that this is more of a corrective price action rather than a bearish price action. There's a difference in that, right? If we look at a few yen pairs, Pound yen, yeah. So pound yen, again, some of you guys were looking at this as a head and shoulder perhaps. Now I do agree we did break this previous low, right? And if we break the previous low, what do we usually look for? We want to wait for continuation price action, continuation correction. But we didn't really get that, right guys? There is consolidation here, and if you were to enter, generally we set entry order, right? So if the price doesn't move down to take you in, then there is no entry here. Instead, you can see price pushes up and looks like there is some consolidation here. Again, at the time I do agree there is something going on here, but when I zoom out, all I see is that it's just a strong bullish push up. We did break this previous high, and potential this could be a double top, but again, the lower time frame, it's not as significant as something that I would expect, and price pushes down, there is no continuation, right? So generally, I'm not looking for sell like this. It's not enough confluence. There is no entry here, in my opinion. And what more likely now is if we just gonna form into this consolidation, if price does break out followed by a correction, this is likely to kind of continue the high here. So a couple of the yen pairs, someone mentioned about, I think, CAD yen sell. Again, it's the same thing, right? I mentioned this also, is that I do agree there's something going on here, but that's all we see, right? We can see a higher time frame top, higher potential lower time frame impulse down, but it's again similar situation, like I point out, is it's not enough here, right? It's not enough to go against this strong of a higher time frame push, right? This is a clear higher time frame impulse. The lower time frame here, if there is an entry here, guys, right? If you push down, if you're going to sell here, then this is reversing up and we take a break even pretty much. But generally, again, my perspective here is that the price for the higher time frame is still look pretty bullish. So I wasn't really interested in selling like this, right? I just didn't think this much development was enough. Now the difference here now is if we created a larger structure like this, then the sell will be much better. Whereas the sell at the time was just too little development here that fits my plan to enter like that. That's against the higher time frame, right? So again, I made that workshop video. If you guys missed that, watch that workshop video that explains why I wouldn't go short against the higher time frame. Now it's probability, right? So sometimes going short here, it can work out for people, but again, we need to increase the probability of success, right? We need to increase our probability of higher probability setups, and generally something like this is just not something I would take. Again, if we develop something bigger, something more structured, something like this, then looking for the sell, I think that's perfect because the higher time frame top, and we have a noticeable structure here on the mid time frame, and generally this is going to give you a consolidation which showing you that the bullish momentum is exhausted. But in this case, we just have a smaller lower time frame structure, and this is why I'm more leaning towards that the price is just going to fall into more of a correctional phase and potentially still continue the up move here. Okay, so I just went over, like I said, I'm not looking for a sell on CAD yen. Just explain all the reason here. Let's continue here, but I think those are the only yen pairs, right? There's not much else yen pairs that's in this situation. Euro yen, same idea, right? Bullish push up. We didn't really reach the high here. There is some lower time frame push down, but again, my point is that this is more into falling into a more of a corrective phase, that I don't think that this is going to continue going down. Rather, this is just more of a corrective phase to potentially go higher. Okay, that's my view here. Hey buddy, thank you very much, my friend. Thank you, appreciate that. Alright, so let's move on here. Let's move on a couple other pairs. Euro Aussie. Yeah, Euro Aussie is on my watch. I mentioned this on here. I do agree Euro Aussie is sell, right? If we look at the higher time frame, this aligns with the higher time frame. There's a difference here now, right? Because Euro Aussie here, we have this higher time frame head and shoulder, we have the higher time frame impulse down, and we break this previous low here, which is nice, right? We're looking for further downside. Again, this is why I choose these kind of pairs or interesting in these, because it's aligning with the higher time frame, right? Higher time frame shows you a double top here, head and shoulder ascending structure, so the higher time frame bias is sell, right? And the lower time frame here is giving us potential selling opportunity. We broke this previous low and watching to see what happened here. If we get consolidation, this is likely to push down the price a little bit further now, which is nice to see. Again, I made that video about it, right? There's during this time there was people trying to go long here. That didn't work out. There's people trying to go long here once it break out of this. That didn't work out, right? Again, when the higher time frame momentum is strong, I don't try to catch the knife, try to catch a falling knife, right? Because you want to make sure there is a lot more development here before you enter, rather than just kind of catching the falling knife and then, you know, price continue to drop down. You're just taking unnecessary losses here, which is not going to make you consistent, right? You gotta take better setups, higher probability setups in these kind of scenarios, right? So sorry guys, my voice is gonna be very static, so I'm kind of sick today, so bear with me here if you don't mind. So when we went over Euro Aussie style, I do agree this area here is key of interest if we get consolidation, or this in fact is potentially breaking out as well. So monitor this price. I think further downside is possible. Further downside to this previous low is possible as well. So let's continue here. I'm just going in order, guys. So some of the pairs you mentioned, I will talk about it. I'm just going in order, so I will get to it eventually. Euro pound here. Euro pound is something that's interesting. I think there's this potential something developing here. Now, the larger of this correction goes, the more neutral it goes. You might have hear me say this is that after impulse and move down, normally when I look for continuation, and remember I think was during around this period of time, I was still leaning towards a potential continuation. Now, if we see where the price we continue to evolve or continue to develop, that we have more swing highs and low now, this is generally good because this makes this correction more neutral, and it's likely that we can see this as a more of a parallel channel, and it's no longer kind of a ascending channel to go down. This is more of a neutral parallel channel, and again with the few swing highs and few swing lows that the price is doing, I like how that we potentially is at this previous low now, right? So this could be a lower time frame double bottom, and there is consolidation here, which is nice to see, right? So my plan here is waiting for price to impulsively break, right? We want to see a confirmation price to push up and confirmation correction here to enter the buy. I think that's reasonable to get in. Again, don't rush this process, right? Price can consolidate here and perhaps even forming into a bearish correction to go lower. So we're not trying to just jump in here with no confirmation here. You generally want to wait for price to impulsively break this high here and continuation up to the upside, right? There's enough risk reward for you to consider entry like so. And generally, like I said, this correction, the longer it goes, right, since March, so it's going about 7 months now, the more neutral it becomes, right? This can become a reversal for this bearish move down rather than just a flat out continuation. So I'm going to monitor this price. I want to see whether or not price pushes up, and then continuation after to push the price higher. Euro Kiwi, it's similar like Euro Aussie, right? Euro Kiwi here, we finally have this impulse down correction. Impulse down, and I mentioned about at this time, if you guys remember a few weeks ago, I always talk about this is likely to be a bearish sell. Those of you who got in on that, good job. And we break this previous low, right? So that's good to see. Whether or not we're going to get continuation here, if we do, this is generally going to be another move down for the price, something like this, right? Impulse correction, and looking for another impulse down, which is nice to see, and that may continue the Kiwi strength as well. Yeah, I'm okay, thank you very much. I'm just, I don't get much sleep, and it's like a common cold, so I'm not, nothing serious or anything, but I'm okay, thank you. Now let's continue here. Pound Kiwi. So pound Kiwi here, those of you who still holding this is very good, right? We talk about the potential downside after this consolidation finishes. So we impulse down, continuation, and we impulse down again. We're at this previous low now. Now I mentioned this previous low is likely to consolidate, which is kind of exactly what's happening here. I think consolidation here is good, but I'm not looking to sell here because I really don't want to sell into this previous low here. What I would rather wait for is price just finish the consolidation here, and if we have a push down followed by another bearish correction, at least we break this previous low. Right, this is very similar like Euro Kiwi. We waited for the price to break the low, and it's very similar like Euro Aussie as well. We break the low as well. So I think the key here is just be a little bit patient here. We know the price is likely to continue this bearish kind of trend, but just want to enter at a better setup or a better potential safer setup once we break the low, and then continuation down after, which is something that I will be looking out for. Alright, so that's Pound Kiwi. Those are the ones that I'm looking at for the week ahead. Now take a look at potential some of the pairs that you guys are looking at. Now I see went over Aussie Cat Long. Aussie Cat Long, I do agree is, or I do have a bias that it's potentially looking like we could get an upside move. Now I draw the structure like this is more of like a descending structure here, right? We're pushing down like this. And if we look closely into the lower time frame here, is that we have this double bottom here. Price pushes up, there is continuation. Again, because of how I identify a structure like this, I'm not really looking to enter here, but I would wait for the price to impulsively break the correction here and then continuation up after. I think that would be a better setup or a better entry, so to speak, in this case. And generally, you do have pretty good risk reward if this consolidation completes, right? We've been in this consolidation for quite some time, since May, so that's about 3 or 3.5 months already, right? So generally when we see something like this and we just hit the double bottom here, right, there's a difference here. You can see double bottom and we have a larger structure, right? The difference here, remember some of the yen pairs we look at is if price just hit that top, but if there's not a larger structure and then we try to short here, you see they don't generally work out. But once we develop into a larger structure, generally that gives you a better bias to look for the sell. Right, I'm inversing this chart just to show you the same as a lot of yen pairs that we were looking at, right? A lot of yen pairs was looking pretty clean like this, right? This was a lot of yen pair looking like the yen pairs hitting the previous high, and then there is some lower time frame development here, but generally that wasn't enough to offset the previous bullish move, and that's why the market didn't push down after. But in this case, because we form into a larger correction with the high here, that gives you a better confluence, give you a better probability to look for the sell. Okay. Head and shoulder or inverse head and shoulder, right? I think that's what you meant, maybe. I see it like this. So that's Aussie Cat. Let's continue here. Euro Pound, I went over that earlier, right? Euro Pound, I'm looking for a potential upside. I'm just looking at the bottom here. If price can break out followed by continuation, that's something that I will wait for to possibly get in. Moving on. Euro Aussie. Kiwi Cat. Kiwi Swiss, yes, Kiwi Swiss, I do agree it's more upside, right? I think we generally have the same bias here across. After coronavirus, we push up, correction, and we push up again, and this is just a larger correction as well. You can see we finally break above the correction, and then there was a continuation price. We push up the higher here, and we're breaking above this high here. So last week I mentioned if we can get some sort of consolidation here, that would generally give you another buy. This is also looking like potentially we can form an inverse head and shoulder. Depending on your entry, again, it's up to you how you plan to enter, but I do agree the upside here is very likely. If we either get a consolidation or we just kind of start reversing back up, there is enough risk reward here for a potential up move, right? About 200 pips or so, depending on how you plan to enter. But the bullish bias here is looking pretty clean, in my opinion. Yeah, I'm gonna go over, so I'm gonna finish the Forex pairs and then I'm gonna go to commodities and then I'll go to indices, okay? So just bear with me if you don't mind, I appreciate that. So, I think someone mentioned about pound cat sell. So pound cat here is at the bottom of the structure. Now, generally when the price reaches the bottom, you want to be careful, right? Because generally when price hits the bottom, this is when it reverses up, right? So you want to be careful. Now, I think the higher time frame gives you a more of a neutral perspective. Is that we're in this higher time frame structure. We're also in this part of the price as well. We're at the bottom here. Whether or not we're going to form consolidation to go lower, or this is an area of a potential reversal. So you can see this is a little bit conflicting because the higher time frame, you can argue that this is an impulse and move up, and this is just a consolidation potentially to go higher. Whereas lower time frame, I do agree there is a bearish lower time frame push down, right? But perhaps you see it this way, perhaps there is consolidation here. But generally speaking, because there is conflicting bias here between the lower time frame and the higher time frame, I generally won't be entering these positions, but I think that I don't want to enter something that, again, have conflicting bias with the higher time frame and lower time frame, right? That's as simple as that. There is better pairs that have the higher time frame and the lower time frame align up, and those are the pairs that I'm going to focus on, and those are the pairs that I'm going to risk my money on, right? And situations like these that can go either way, I'm happy to let it go. Right, I do agree if you're looking for sell, there is lower time frame confluence, but the higher time frame also could potentially be an up move, right? So I'm happy to let this one go. Pound dollar, we went over pound dollar earlier. I'm not looking for sell, at least from my perspective. I'm looking to see if price can break out of this descending structure and bullish continuation. That's how I'm planning to take a look at this. I don't really see the sell. Maybe some of you guys do. Again, follow your plan, right? But I see it more as that the higher time frame still is in my favor to look for a bullish up move. Descending structure, higher time frame structure. We push the price down, breaking the previous low, but no continuation. Instead, is a bullish up move. So I'm not looking to buy here, but if the price does indeed impulse out of the descending structure, then lower time frame correction here, I think that is a valid buy. Swiss yen, mentioned that all the yen pairs I'm not looking to sell. Swiss yen here, it's probably the only different one that has a bit of more confluence. So there's a previous high on the higher time frame, and lower time frame here we did have this really strong impulse and move to the upside. Now this is the same thing as kind of what I mentioned as well, is that higher time frame top is good, but I think this structure here, if we evolve a little bit more, that would be nicer. I think at this current stage, at least from my perspective, it's a little bit too small. It's kind of the same thing as all the other yen pairs that we were looking at before, right? A lot of these yen pairs had a smaller consolidation, but they generally did not push the price down the way how we want to see. Instead, it falls into more of a corrective price action, right? So same thing with across the couple yen pairs. So my bias, at least my point of view, is I'm not really looking for sell. I'm more looking to see most of the yen pairs be bullish rather than bearish price. But that's my opinion, right? That's just my view, right? Follow your plan, follow your view. If that all makes sense to you. So how do I inverse the chart? Right click the thing here, right click the price, inverse scale. That's all I do. So inverse scale like this. Yeah, I'm gonna jump to commodities after, guys. I'm just wrapping up the Forex pair here first. So I'm gonna continue here. I basically went over all these pairs already. Personally, I still think dollar Swiss is looking for downside. I don't see the upside here. I think the larger structure or the larger price here is still looking for potential down. We'll see how this area goes, if it's going to consolidate more to go down or not. Okay. I think that's about it. So let's go to commodities now. Let's go to commodities. What do I think about silver? I still think silver is a lot of upside potential. I personally think silver is still looking for upside. I'm in silver from the bottom here, right? So I'm still in silver. I want to see how this previous high is going to react. Whether or not we're going to break above, right? That's kind of one option. Or are we forming to deeper consolidation, like this inverse head and shoulder, or are we just going to reverse up this point and I'll manage the trade accordingly. But I still think silver has generally more upside move, right? Because once we hit this bottom here, once we break out of the structure here, I do expect price to eventually hit the high here. So that's silver. A lot of you guys are asking about gold. I generally don't think there is good price action of gold. Again, you guys, those of you who follow me, you'll know I always prefer silver over gold in terms of price, in terms of technical. I just don't see the confluence here. I like how we're just like slowly climbing up, right? We're slowly climbing up after hitting this previous low. We have this falling wedge, we're pushing up, but there's not really clear price action like this, right? What we generally want to see when it's the price is in the bullish trend is that we want to see impulse phase, correction phase, impulse phase, correction phase in this fashion, which is exactly how silver is moving, right? Impulse move, correction, impulse move, correction, impulse move, correction, impulse move, correction, right? This is generally what you want to see when it's in an uptrend, right? You want to be in positions like these. Whereas gold just doesn't give me that clean of a price action, but it is moving up just kind of what we expected. But I don't think there is clean entries. I don't think there is clean development, and that's why I prefer silver. Now we're gonna approach this high soon if price continue to go high. So I think this area is a key area to watch out for, because I still have the structure drew like this in a higher time frame perspective, right? This is still a high time frame impulse up, right? All the way from 2018. This is a bullish impulsive phase on the high time frame. You can see there is mini impulse correction, right? This is how generally the price will move. And now we fall into a larger correction, which is nice because now you can see that this is likely to be a continuation for this up move, right? So we're generally going to see another up move if we get a consolidation complete, if we get this correction complete. Now you can also see there is an inverse head and shoulder here. Now I would have preferred this inverse head and shoulder at the bottom here, potential double bottom, and then this was at the lower area. You can kind of argue that this did hit the low here, so again, depending on how your perspective is this. But if we can break out of the higher time frame structure and then continuation after, I do think this is going to reach the all-time high, if not break above. But that's more of a mid to long-term approach, right? So on the lower time frame here, just monitor the price, what to do in this area. I definitely will not look to buy to the top. I would rather wait for the price to break up and then continuation after. That's always going to be the safer buy or the better buy, so to speak, in this case. So that's gold. Some of the other commodities I'm looking at. If I'm seeing what else you guys are saying. Platinum, yes. So platinum, I think generally you guys are looking for long. We broke this previous high, right? I talk about that we have an inverse head and shoulder. We have this previous low that the price kind of reverse up now. This area is a little bit consolidated, but usually it's good because it came from a bullish up move, right? And we broke this previous high as well. So if we get consolidation here, I expect price to continue its bullish trend to the previous high here, which is nice to see. And overall, you can see price has already made a lot of move down here, and this was like a turning point from this previous low. So a consolidation here will generally give you another buy to the top here. Now there's a few commodities I'm looking at, just a general perspective. These are usually more of a mid to long term approach. Corn here has a really strong bullish up move, right? And we finally fall into a consolidation, and there's a lower time frame double bottom here. So basically what you want to see is price to break out of this structure here, and then lower time frame consolidation to push the price higher. Sugar is really interesting. I think some of you guys are also looking at sugar here. I think it was last week in the market update I mentioned about this can easily lead into a continuation downside, which it did. Now I think the key here now is we're at the bottom of this structure here. Can we get a consolidation here that usually is going to be like a correction after the breakout, and expecting the price to push down to this low or the previous low. And there is healthy risk reward in my opinion for this move down. There is enough of a price, enough of a room to consolidate here and look for the downside to the previous low. I'm still looking at fuel oil, right? I think oil doesn't change, guys. The structure doesn't change. It's just whether or not we're going to get this this sell here or not, right? I'm not looking to buy. If the price doesn't push down, I'm not looking to enter anything. I'm just going to monitor this price continuously. But my plan, my bias, nothing changes, right? I'm still looking for the price to complete this higher time frame structure, complete this ascending channel, have the impulse down, have the correction here to look for the sell. It's the same as UK oil, right? It doesn't change. UK oil now is actually hitting this previous higher time frame high. Again, the difference here, guys, is compared to all the yen pairs is that we didn't just have a strong push to the upside and then a small correction here to sell. We push to the upside, we have a larger structure to back it up, right? That's the key difference here between the yen pairs, and this is why I'm more inclined, I'm more inclined and willing to look for a short like this compared to the yen pairs, which is just a difference between the structure, between the price development in that case, right? This is a larger bearish structure that we are seeing here on the oil, whether that's UK oil, US oil, and we have the double top here in our favor. Again, higher time frame structure, ascending structure here. Again, it's waiting for the price to push down, waiting for the consolidation, right? If those conditions are not met, then no entry, right? Just let the price pushes up, and then we can change our bias once it pushes up and form another continuation to go higher, right? But until that happens, then our bias remains the same, right? Our view remains the same. We're still going to look for this downside move if it plays out. Okay, so that's my view here on oil. Again, I think that's all the commodities that I'm looking at, unless I miss anything now, unless I miss anything that you guys are pointing out. But that's my view on oil. And again, silver, I keep getting the same question. My plan is simple, right? Just looking at this previous high to see what the price will do. Right? I don't need to panic. I don't need to, prematurely exit or prematurely not exit, whatever. I'm just going to see whether or not price can break this high. If it does, I'm going to hold. I'm going to scale in on the position all the way to the high. If we form into deeper consolidation, then we're just going to see how deep this is going to go. Is it going to create the same inverse head and shoulder to continue? And that is it, right? No other plans here, right? Just stick to your plans, stick to your management, and let the market does its thing. There is no yen pair structure. That was kind of my point, is that there is no yen pair structure, right? Because it's just a small consolidation or small bearish correction, and this is why I mentioned I'm not looking to sell the yen pairs. Whereas if you look at this, how the difference between the yen pairs is that they all have that bullish push up, they all have the higher time frame top, but this is not enough to sell. Whereas if you look at oil across the board, is that you have the same bullish up from the price, but we fall into a larger structure. This is a larger structure to the high here, because if you think about it, the higher time frame was really bullish, but we hit the high here, we hit the high with the larger structure. That's really the difference between oil and a lot of yen pairs that you guys are looking at, because you can see on the higher time frame it's just a bullish up. There's nothing here that's noticeable on the higher time frame across the yen pairs, right? There is nothing across. There's just maybe one or two bearish candle, and that's it. But if you look at oil, all of them arrive to the top here with a larger structure. There's a better price action here. That's really the difference here, guys. Okay, so now let's go through the indices now. So indices here. I mentioned about when price was around here. I think it was a week ago or 2 weeks ago. I generally wasn't interested to buy, and I saw some of you guys got in on the buy. So good job on your part, again, to follow through with your plan, right? Just because I didn't enter the long doesn't mean you shouldn't enter the long, right? We talk about the long, we talk about the potential upside, and I do agree the push to the upside is very likely, which it did, right? Which is good stuff. So follow your plan. Now the price is at this top here now. That's why I mentioned we want to observe what the price will do, right? So if you look at overall price, is that we had the ascending structure, we pushed down, but we kind of fall into this inverse head and shoulder. We push to the high here. This potentially is a top here, but again, I want to see a little bit more development, right? This is a little bit different now because we could easily form into potential structure like this. If we just kind of zoom out here a little bit, this is potentially the new structure now, right? So you can see there's a little bit more structure here that the price is developing, right? And that's the difference here, guys, right? Now we evolve into a larger structure, which is nice to see. We're going to see whether or not price is going to react to this previous high or all-time high now, right? Because it's a larger structure here. Now we're going to see whether or not we're going to consolidate continually. If it does, that's a good thing to see. If it does push down followed by correction, that could be a possible entry here. So that's Dow Jones. If we look at S&P 500, it's going to be the same thing. Now I didn't expand the structure yet because I think it will look a little bit weird. So I keep it like this now, but it's similarly we're at this previous or all-time high now, and it's the same kind of approach like Dow Jones. Is that can we get a little bit more consolidation here, and then if we do, can we get the bearish push down from the price and then continue downwards? Now I think Dow Jones ultimately is a little bit better because the structure makes sense. We have a larger ascending structure. We just had a bullish push up to the upside to the double top here. Again, developing a structure here would be nice to see, right? Again, this aligns with a little bit better than what we used previously, because you generally, for the indices, we want to see these type of price action to form, right? These type of reversal price action, because they generally give you that impulse reverse afterwards, right? So that's Dow Jones, that's S&P 500. Nasdaq, not too much here. More looking like if we're kind of more waiting to see we're gonna get another upside here to the previous all-time high, and then same plan like the Dow Jones and all that. I'm just kind of waiting to see what the price will do when it does reach the previous high here. Any reason I keep the bullish candle red and vice versa? No reason, just preference, right? You don't have to keep it green and red the way it is. You can change them if you like. To be honest, in Asia, by the way, those of you who don't know, in Asia, this is completely opposite. Asia has the candle red as bullish and green as bearish. To be honest, you guys can search that up. But that is, doesn't matter, right? I can change it to purple, I can change it to black, it doesn't matter. Because all that we're looking at the price development, we're not looking at candlestick development, right? Candlestick formation or development, it's an added confluence, but it's not a must, because The moment I change it to line, then really it doesn't matter with the candle color anymore. Would you agree? Right? It doesn't matter the candle color anymore because there is no candles. But would we agree that price action still exists? Will we agree that structure still exists? Right? Will we agree impulse still there, correction still there? Right? So that's why the color of the candle, how it really is not too irrelevant in this situation. Right? I can change it to any other of these formation. The price action is still going to be there. Alright guys, so any question on the indices before we move to crypto, and then I'll have some Q&A after. I think this is all the one that I want to talk about. I don't really see any other indices that are really on my watch. I think there's someone show me the UK 100. So UK 100 here, kind of similar like Dow Jones here, right? We have this larger kind of structure here. UK 100 is the similar situation, right? Few swing high, few swing low. Previous double top as well, but this looks more like a bullish correction, which I don't really like, right? We want to see bearish correction here to potentially sell, right? But this doesn't give me a bearish reversal right away, so I'm going to wait a little bit longer to see this potential development that could work out in our favor, right? So that's about it. Alright, so let's continue here to crypto, guys. After crypto, I'm gonna have Q&A, if I'm okay to do a Q&A. But mostly I'm looking at a few crypto like Cardano. I've been looking at Cardano for a really long time. Generally, I'm looking for a bullish outlook here for the price, right? So you can see Cardano has already been moving up quite a bit already. So I'm looking for if this is going to give me another bullish push up to the all-time high. Now Bitcoin, I've been asked a lot of these questions about Bitcoin. Remember when price break the all-time high last week? I mentioned don't buy right away, because what it's likely to do is exactly what happened here, is that price break the all-time high. And this is where a lot of FOMO buyers trying to jump in, because or just retail buyers or whatever, all they get is the news that says Bitcoin breaks all-time high, and all they do is just to jump back in, and then you can see the market pushes down, pretty much again liquidate these buyers. But once the liquidation completes, right, once we have all the sellers basically all the buyers gets liquidated here, the price is kind of resuming the bullish trend. This happens all the time, right guys? This is why I always tell you guys don't buy because it breaks some resistance, as people call it. Breaking out of the trend line doesn't mean anything, right? You need to wait for consolidation to confirm the upside. And this is a prime example of it, where breaking above and quickly pushes down to take a lot of traders out, and then just to resume the trend afterwards, right? So I also got a question like, can this be a head and shoulder? Sure, it can. But if this is going to continue pushing up above the high, then it is no longer an inverse head and shoulder anymore, right? So my approach here is simple. Wait for price to continue upwards, potentially breaking this high or just consolidate here. I think that's fine with me. Preferably breaking this high here, right? If we can, then wait for consolidation and wait for the buy, right? It's very simple. This is very likely to just continue upwards now, right? Again, this is how the market generally does to take out traders and then resuming the bullish trend, right? This happens all the time, guys. So be on the lookout for something like this, right? Don't get FOMO, right? This is exactly why the market kind of punishes the FOMO buyers here. It pushes down, taking the traders out, and then now we're going to form a reversal correction and potentially resuming the up move here. Is that 1 hour already? I wasn't even looking at the time, but thanks a lot, my friend. Appreciate it. Don't worry, I can keep going. I appreciate that. I will wrap up the crypto and I'll have some Q&A for you guys. So let's move on here. Rune, RUNE. I was looking at this. I was actually looking at a potential buy setup here if we can push up, but it was just the market push up so fast. I couldn't really look for a entry. But I think generally here is that we have this impulse move. We have the consolidation. We break up now. We're breaking above this high. Consolidation here usually going to push up the price to the all-time high here, which is something that I would love to see. Solana break all-time high, someone mentioned. Yeah, that's kind of what I was expecting it to do, right? We talk about this bullish up move after this consolidation. We just end up forming into a larger consolidation, but basically it's the same price, right? We, instead of the smaller correction here, we just form into a larger correction here, right? And then we have a smaller correction. Now we push up above the all-time high now, right? Which is nice to see. So my plan here, wait for the price to completely break this high here. Remember, the same Bitcoin example is that just because it break the high or the all-time high here is not an automatic buy, right? Wait for price to break the high and wait for price to correct, right? And then look for the upside. That is always going to be the better entry and the higher probability setup, because you wait for the consolidation to look for buy. Because same thing can happen here, right? Price pushes up, tagging traders to start buying, and then just push down here, liquidate the buyers, and then form into another consolidation and then push up the higher, just exactly like Bitcoin that's doing, right? You can see that breaking the high, pushes down, form a reversal, and then continue uptrend. Same idea here on Solana, right? So think about that, right? Because the price is going to push up higher and higher, you don't need to get FOMO and start buying here. Wait for the price to push up, wait for consolidation, and you can hold this trade longer. Last one I want to go over is Ripple. Actually, I think Ripple is actually something that I was inclined to look at. After this bearish push down, correct and push down, we fall into a reversal, right? This is a reversal correction, and then reversal correction leads to this bullish move up, and then looks like there is bullish continuation price action. So what do we do in this kind of situation? Well, wait for the price to break out, right? Wait for price to break out, continuation, and look for the upside to the previous high. Okay. Any question, guys? Any crypto on? Any crypto that you guys are looking at? You're welcome to let me know. Let me know long or short, if anything. So. AXS. This is looking pretty nice. I think this is pretty clear bullish up move, right? We have this bullish move up. I remember there was a correction. That's why I had the drawings there. This is probably from in August, I remember. Correction here, and then another consolidation here. We push up here. Now we're forming exactly what you want to look for, right? Another consolidation. So if you see how the price move, this is a very standard bullish up move, right? Impulse correct, impulse correct, impulse correct. This is how the price move generally, right? And if we're going to get a consolidation here, that's nice to see, right? Let the consolidation finish, whether we're going to correct a little bit long or we're just going to break up, then look for consolidation after we breaking out of this position, breaking out of this correction. That would be nice to continue the uptrend, right? So we went over Solana already, right? Solana is upside here, right? We talk about forming a larger correction here, and then we continue the upside. We're at the all-time high now, so to me it's just waiting for price to break all-time high and then consolidation after to go. I don't really trade Shiba or buy Shiba, but I'll talk about it. Seems like it's always the fan favor. This happened last week, I remember, right? I said wait for this consolidation to finish and wait for the up move, which is exactly what happened. Remember, when we fall into this consolidation, this happens all the time, guys. This happened to crypto all the time. You have an initial push up, decline, consolidation, push up, and then continue breaking the all-time high, which is exactly in this case. We talk about all the crypto generally move like this, right? So if you didn't get it on here, we're pretty much breaking the high now, right? So another consolidation here, or maybe a push up first, followed by consolidation is much better in this case. Okay, I personally not really planning to buy this, but in terms of price, I think that makes sense. I always do the stream, mail to Vireg. I always do the stream Monday and Wednesday during New York session. I've been doing that for over a year now, right? If it's the first time watching me do these streams, you can either watch them on my trading view. You can either watch them on TradingView. So you click my profile page, you can go stream. This is where I've been doing the streams for more than a year now. It's saved on TradingView. It's also saved on YouTube. You can go to my YouTube playlist. Midweek market update is the one on Wednesday during New York session. I've been doing them for a really long time. And the one you're watching right now is a weekly outlook for the week ahead. Again, I generally will do them on Monday and Wednesday during New York session, which is 14 o'clock GMT. You can either subscribe to my YouTube and you'll always get the upcoming stream time and stuff like that. They'll always be here that you can take a look. I generally do post them on TradingView as well for the one after, right? So there's a mid one after. So you, as long as you follow me, you should get these notifications. All right, so any other crypto question, guys? I'm happy to do some Q&A now. I think I answered most of the question now. Let's do a quick Q&A, guys. If you guys have any questions that I haven't answered or any pairs that I haven't discussed, I'm welcome to do some Q&A now. Euro dollar. Here's really why I enter. Again, it's a riskier entry. I didn't wait for 15 minutes. I didn't really need to. When I see the price pushes down like this, and when I look at the charts, there's really no continuation. Instead, we had a strong bullish reversal, right? So we pushed down the price. I didn't really see bullish. I didn't really see bearish consolidation. I just see a bullish up move. And I saw an inverse head and shoulder, and that's why I entered. Now, if you waited for 15 minutes, it's fine, right? Now we're forming into a 15-minute potential flag, and you want to enter like this, it's fine as well. But just be careful of the potential risk, right? As I always say. But the difference here is, like when I talk about pound dollar, is that when you see a bearish push down, when you don't see continuation, instead a reversal, this is generally, again, it's a sign from the market where the bearish momentum is no longer valid. We quickly have a bullish reversal, and that's why we lead into a bullish kind of trend. Again, that's just my opinion, right? That's just I'm accepting the risk that entering here could be costly. This can still push down, anything can happen. But again, backtesting chart work gives you more confidence in entering something like this. This is still a larger structure, right? Originally, we had the structure drawn like this, right? I think a lot of you guys see the same thing. And generally, we want to see structure like this and then continue, right? This is something that at this point we were looking at. But all we see now is just a larger structure like this, but still is a bullish up move potential, right? So, and potentially I am entering as a reversal entry, right? This is reversal entry because we enter at the bottom here. Now reversal entry, as I always say, is high risk, high reward, right? So I understand the risk, I'm fine entering this, and happy to take a loss here if that's happened, right? So German 30, yeah. Now I remember when this price pushes down, and I mentioned about that there was an inverse head and shoulder. You want to be careful here because breaking out of the structure is one thing, but if there is no continuation, if there is no bearish continuation price action, then generally we're not going to be shorting here. And now we pretty much kind of move up into this pattern now. So I don't even think this makes sense. I just keep it like this. But I do see the bias here is more looking like it's going to go upside. Now, depending on what's going to happen here, if we consolidate a little bit more here, this likely to be more of a bullish up move to the high here. And that's why I'm not really looking for sell or buy here. I think that we're kind of in the middle of nowhere now once again. Generally speaking, after this bullish move up, we could likely to see more push up to the previous high. But again, this doesn't really interest me to look for a buy or sell at this point, okay? So there's some question from David. I'll answer these questions. Let me give me a second here. Hey, thank you, my friend. Appreciate that. There's a question about candlesticks. Yeah, we can talk about this. So David says about candle closing for Nasdaq, UK 100, Dow Jones, close at 5 p.m. New York time. Yes, it does close at 5 p.m. New York time, as far as I know. You can change them based on your time. I think this is why you should always leave it at UTC. I know some of you guys change it to your own time zone. That's fine, but I always just go with UTC. I always talk about GMT and UTC time. Have your chart at UTC and always remember what your current time is compared to the GMT or UTC time. It's the best. Normally, candlestick always close at 5 p.m. 5 p.m. 5 p.m. New York, or you can think of it as 2 p.m. GMT time. So 2 p.m. GMT time. No, sorry. What I was going to say is 5 p.m. New York, right? So it's 21 o'clock GMT. Sorry, I'm sick today. I'm not really thinking. Sorry, guys. 21 o'clock GMT is the rollover time, which is when the candlestick closes. Okay, so 21 o'clock GMT is the rollover time, right? That's when the new candle starts. Okay. So generally, just change your clock to UTC time, and that should be okay. Pound yen sell or pound yen buy, my friend? You wanna let me know what you're looking at? I think some of you guys asked me about pound yen earlier as well, right? I'm not looking to short pound yen or anything. Again, we talked about this earlier in the beginning, is that we see a head and shoulder, right? But the head and shoulder push down, there was no bearish continuation to push lower, in my opinion at least. Instead, this looks more of a kind of just a pullback, so to speak, right? So if this breaks out followed by continuation, then this could be easily another push up to the high here. Again, my bias is all from the higher time frame, right? I value higher time frame more than lower time frame, right? And I see this as a bullish push up, even though we are at this previous high that potentially could be a double top. But in reality, if this consolidate here a little bit more, if it consolidate a little bit more sideways like this, then generally we're gonna see another upside move rather than a right away bearish move. Right, so when you're in doubt, just zoom out on the higher time frame and see if there is any structure here. If there is no structure here, if there is no noticeable structure, then chances are the setups here is valid, but may not be a higher probability setups that you want to look for. Why don't I look at pound index like a US index? You could if you want. I don't think there's any. I think pound index, it just looks like exactly like pound dollar, right? So if I go pound index, I don't even know what it's called. I forgot what it is. Not this one. There is a name for it, I think. Oh, it's called BX1, right? Like this looks exactly like pound dollar, right? This looks exactly like pound dollar, so there's no difference here, I guess. So hope that answers your question, Herman. I think most of the index except dollar index, they all look generally the same as the currency in that pairs with dollar, right? So pound index will look at pound dollar. Every other index should look at the resemblance part of the dollar pair itself, right? So. I don't really look at more fundamental. There's nothing wrong with looking at fundamental, but I'm just looking at purely from a technical perspective on oil. Now we're at this previous high of oil now, right? So we're falling to a larger structure, which is generally good because you can see it's similar structure like this from the past before the bearish move happens and then kind of falls into another bearish push down. Now I'm more leaning towards a sell, right? My bias here is looking for a sell to push down correction and then push down the price lower. That's how I will look for a short sell on oil. My bias here again generally is looking for short rather than long, right? Similar structure, similar ascending structure that leads to the bearish move down, right? So we might get this bearish move down as well depending on how the price develops. Again, I'm just looking purely at technical, right? I'm looking for a push down from the price first and then continuation to sell. Anything else happen, I'm really not interested in the sell, not interested in any entry. If this pushes up and followed by continuation, then I might, look to change my bias here. But at this given moment, if the price is still within, we're still in this consolidation, then nothing changes. I'm still looking for this setups to happen. Right, so patience is key here. If it doesn't develop, if it doesn't form, then no entry, right? Just move on to other opportunities. So. Okay. Any other question, guys? Any other question, Q&A, any pairs, anything that I missed that you want me to take a look? I'm happy to do that. I saw a lot of newer people. If you guys interested in these, welcome to subscribe me on TradingView or YouTube and Telegram. This is where I post all my analysis on different pairs and different things that you can be useful to you. Everything in my YouTube is free, so you can learn everything I do here for free. All these price action workshop is where you're gonna learn everything I talk about today. You have risk management videos, you have trading psychology videos, and you have price action analysis. This is where you're going to learn all about patterns and structures and impulse and correction phases. Everything else is in here. You can watch my recap videos where I go through all the live trades I take, win or lose, everything, and this is where I show them. So this is a lot of traders join my Telegram to learn, so this is all free. I post analysis, recap video, educational video, things like that. You're welcome to subscribe to get all my info. Nothing here costs you money, so you can join for free. And then we have a group discussion chat room where you can ask questions here. There's about 1,000 of us in here that people interact and talk with. You're welcome to join to ask questions. So. No, I didn't talk about Cat Swiss. Cat Swiss was an example that I kind of mentioned last week during the workshop video. Again, is one of those things where this is what I see on the higher time frame. Okay, so this is what I see on the higher time frame, that I see a more of a bullish push up, bullish continuation, and potentially we could continue the upside. Again, this is the area where people got caught up with the short. Now it's the same kind of bias here. There's a double top, there's a structure here, and price is pushing down, and then there was a consolidation here, right? And either people enter here or enter here. But again, it's the same thing. We push down, but just not enough momentum to continue. It just reversed back, pretty much taking you off for break even, and then potentially we're forming into an inverse head and shoulder, right? So again, I wasn't interested in selling this. My bias on the higher time frame is still looking for upside, right? And this is one of the example, once again, in the workshop that we talk about is conflicting bias, right? Conflicting bias between higher time frame and lower time frame. Now, I mentioned this multiple times, is that it's not that this cannot work out, right? It's not that this sell cannot work out in your favor. After all, it's just probability, right? It's a percentage. A percentage of the time this will work out, percentage of the time it will not. But I always encourage people to think about this. You need to increase your probability of success. You can't just be like, okay, well, I enter here, I hope it goes down. If it doesn't go up, whatever. Well, that's not good enough, right? You want to be a consistent trader. You want to be a profitable, sustainable trader. You need to do more than just kind of guessing this and hoping it will go down. You need to increase your probability of success, right? So you need to start thinking about what kind of entries I can take to increase my probability of success more than just kind of flipping a coin here, right? Because even if you're flipping a coin 50%, you're gonna get emotional, you're gonna take losses and things like that. A lot of things you can't control. So we need to have a higher probability setup. We need to have a higher strike rate, and we need to have we need to always trade with the higher time frame. That gives you a better bias, right? So all that considered is that I'm looking for more upside. If we consolidate here a little bit more, I think that's nice to potentially look for a long, or you can wait for price to really break this high here and then continue upward. That's also a possibility here. But I'm not looking for short here. It's just exactly the same situation like most of these yen pairs then, that I was not looking for short. I mentioned this last week and I'll mention this today. Again, it's not they won't work out. It's just that they're going against the higher time frame momentum, and chances are we're just seeing a more of a short-term pullback, short-term correction, short-term consolidation, however people usually want to call this. But generally, this is more of just a corrective phase for this bullish move. Look at how strong this bullish move up. It's 500 pips or so, almost 600 pips. Right after a 600 pip move, it's natural for the price to consolidate and correct more than 150 pips, and then potentially resuming the price. Right? That's normal, right? We're price never moves in a straight line like this ever, right? And that's why if you zoom out on the higher time frame, there's always consolidation, there's always correction. Right? Even after this COVID drop, we push up, we form a consolidation, we push up again, we form another consolidation, we push up again, we form another consolidation, and we're pushing up again, right? So when you're in doubt, just zoom out and then you'll see what I mean, and you'll see why price doesn't just move up in a straight line. It has to consolidate, it has to correct itself before the next move up. Aluminum. I don't know what's aluminum symbol. I've actually never really looked at aluminum. Is there if you can find a symbol for aluminum, I'll take a look. Maybe in the future, I can look at the future. But I can't really, there's like not much here for me to see, so I can't help you there. Unless you find a symbol for me, I can take a look. What's MAL? Is that stock? Yeah, but that's not the symbol for commodities, right? So anyways, let's continue here. Last question here. Can I elaborate on capital partitioning? Sure. I have a video on that if you haven't watched it, but there's a video here about capital partitioning. You can rewatch it again to see what I mean, but generally this is what I mean. You don't necessarily need to have a lot of cash to do this, right? It's just you need to be consistent, right? So what we do in this kind of situation is, let's just say for example you have let's just say for example you have $100,000 account. Okay, you don't need to put all 100,000 into one broker, right? You don't need to. You can divide it, right? You can either have a 50-50 split, right? And then you can use the other 50% that goes to somewhere else to invest, buy stocks, buy whatever. These have to be liquidable, right? That means that it has to be able to convert back to cash to deposit into your trading account if it's needed. Why we do, or you can split it into 33, 33, 33, depending on how you want. But this is what you do is you don't need to keep all your eggs in one basket, so to speak, and that's generally what we do is you can hedge the risk, right? You can use the extra cash to do deposit in other brokers or other situation. For example, if you have 100K, what I do is a 2/3 split, so to speak. So I'll have 2/3 in my current broker and I have 1/3 somewhere else. This is just one account, right? I have other trading accounts, but in this one trading account, you can divide 2/3. You can keep 2/3 into the broker, and you can keep 1/3 maybe in a saving account or something that's liquidable that easily can convert back into the broker if you need to deposit money, or if you want to withdraw, you can withdraw out. So you keep it as a 2/3, so 66%, 33%, so to speak. The reason why you do this is there's a lot of beneficial. You hedge your risk. You don't need to have all the cash in your capital. And if all you have is, $1,000, you can keep 33% in Forex brokers. You can keep 33% in your crypto exchange, and you can keep 33 maybe in your stock broker or whatever, right? And you would trade them as you have the entire $1,000 account, meaning that your 33% in your Forex broker, instead of risking 1%, you need to risk 3% now, because 3% of your 33% is still 1% of your $1,000. Now, I mentioned this many times, is I wouldn't recommend this unless you are a consistent trader, because generally if you're risking 3% per account, the drawback or drawdown is usually pretty great, and you don't want to get too emotional. If you can't control your emotion all that yet, you should probably wait. Uh, you should probably get more consistent first before you do this kind of approach. But all you're doing is just dividing your capital up into more sub accounts, so to speak, you can put it, and you would trade it as if you have the whole $1,000 in your account. So again, the video explained a lot better, but this is generally what capital partitioning means. How much leverage can I use? I can only use 50%, I think. You can see here, I only allow 50% here, so I can't, in Canada, I can't use more than 50%, not 50%, sorry, see, I can't even talk, I'm talking about 50 to 1, that's what I meant. 50 to 1 leverage is the maximum I can use in Canada, actually. In all fairness, I think the higher the leverage, the worse it can be for a new trader. Typically, traders or new traders or beginning traders or just traders that are not consistent yet, they generally don't have a good risk management or trading psychology that's built into them. So basically, by having more leverage, it just allows you to open larger size account, larger size position, bigger, tighter stop loss, it basically gives you the option to open larger position. But if you're not a consistent trader, and if you get FOMO, you get emotional, you get revenge trading, you start opening multiple positions, this is exactly how traders blew their accounts because of leverage, really, right? If it's impossible to blow your account if you just risk 1% per trade, right, guys? If it's impossible to blow a $1,000 account if you risk 1%, because as your account decreases, your 1% also decreases. Wouldn't you agree? Now, if you're on 900, instead of 1% of 1,000, which is $10, 900, 1% becomes $9, right? So, in theory, it's impossible to blow your account if you have a good risk management of 1%. But traders around the world blow accounts left and right easily, right? Because of leverage, right? The brokers let you open bigger positions. In return, you're going to open multiple positions, multiple same pairs. That will work out generally if it's going with your favor, but if it goes against, you're suddenly minus 3-4 positions, and all sorts of emotional kicks in, because human beings are emotional, and once they lose a few trades, they get all upset and they try to chase their losses, right? And because of leverage, you open bigger positions in hope to cover your losses, and that usually backfires. And once you lose more trades, and all you think about is revenge trading, and that blows up more of your capital. Okay, so I hope that explains well on leverage. I generally think the more leverage you have, the worse it can be for a new, inexperienced trader. Now, if you're an experienced trader, you're consistent, you're sustainable, you understand risk management, you understand trading psychology, then having more leverage is actually good for you, right? Because you know how to use it effectively to your situation. But most traders, or at least I wouldn't say most, but 80 to 90% traders above, they say generally 90% traders lose money, right? So the 90% trader generally lose money because of leverage, right? Because of the emotion, the risk management that they haven't considered. So think about that, right? If any trader is struggling in this concept, then lower your leverage, right? Lower your leverage down to exactly what I have, 50 to 1. Or even less if you feel like that's needed for you to control your emotion, then lower the leverage down, right? Generally, the higher the leverage, the broker, no offense to them, is expecting the traders to lose. They offer a high leverage to inexperienced new traders, because they generally know they're going to get emotional, they're going to start revenge trading, and they're going to blow their account, and then the broker pocket those money, right? That's how it works. So don't be a victim of those. Right? Lower your leverage if it helps you to control, and that will be good for you to be more consistent or work on being consistent in that situation. Okay. I wouldn't say I have tight stop loss, but again, everyone have different perspective, right? Our stop loss or the stop loss come from a multi-time frame point of view, right? We're not just looking at lower time frame to enter. Everything has to align on the higher time frame first, right? Higher time frame bias is key. So if the higher time frame bias is long, instead of entering like a swing trade, right? A swing trader will be like this and earn maybe a little bit, 2 or 3%. That's it. We enter on the lower time frame because we already anticipate this move to the upside. We already anticipate the bullish up move from the higher time frame. All it is that we're entering on the lower time frame to give you maximum risk reward, right? So I don't think it's tighter stop loss. I just think that it's a multi-time frame analysis. You're utilizing multi-time frame analysis to your full advantage because you already know that the higher time frame is likely to go up. You just simply enter them on the lower time frame to give you a better risk reward, right? So generally, if you enter these, then sure, you're getting less margin to open trades, but that could be a good thing, right? Because that restricts you from being emotional and start entering multiple trades in one. Typical social media guru is going to show you they enter like 10 silver position like this, but generally they're not trading with their real account. They're not trading with live money. That's just a demo account to try to show you that they're doing well, right? But you're not likely to enter all these positions like this because all it takes is just one big move down, takes all your position out, and then you get into super emotional and you're gonna start revenge trading, right? So I don't recommend people with higher leverage to enter multiple positions. Having less leverage, less margin actually could be a good thing because now you will know you should only focus on the higher probability setups that's going to give you the money. And it restricts you from entering mediocre or poor setups that's going to drain your profit money. Alright everyone, so I think that's it for me. Pretty tired already, so I'm going to wrap it up here. I'm going to do another session on Wednesday, same time, New York session. So welcome to join me live again on Monday. I'm sorry, on Wednesday. On Wednesday, 14 o'clock GMT, I'm doing another one. I'm doing another stream on Wednesday, 14 o'clock GMT on October 27th. This is going to be live on TradingView and YouTube. So you can go on my YouTube. If you haven't subscribed, this is where you're gonna get all my notification for the live stream that is coming up here as well, right? So you can set a reminder, or you can subscribe so you'll get the notification when I go live, right? Either or. Alright, so that is it for me, guys, and thank you very much for being with me today. I apologize, I am a little bit sick today, so I didn't really go full on or whatever, but I should be okay on Wednesday. And any other question, you're welcome to join my Telegram, and then you're welcome to join my group discussion chat. If you want to ask questions, join here. We have a lot of traders here who share analysis and view and answer questions, things like that. So welcome to join to ask questions as well. All right. So I'll wrap it up here, boys and girls, and I will see you all on Wednesday, 14 o'clock GMT, once again for a midweek market update. All right. Thank you very much, and take care, everyone.